Hey everyone, welcome back to Corporate Decoder, the place where we crack open corporate filings to see what is really going on behind the numbers. And today, get ready because Beneficient is serving up a dish that is definitely interesting. Let's just say that before we dive in, if you like decoding the financial world and want more insights like this, make sure you hit that subscribe button. And if you want to join a community of like-minded folks discussing these filings and more, check out our Discord linked in the description below. Alright, so we're looking at an 8K filing from Beneficient, which is basically a report for significant events that shareholders need to know about. Think of it as a company's urgent bulletin to the public. Now, what is the big news here? It boils down to a big chunk of money, $52.6 million to be exact, being converted from something called preferred and -1 unit accounts into shares of the company's class of common stock. This happened on the 15th of October 2025. So what does this conversion mean in plain English? Imagine you had a special type of investment in the company's subsidiary Beneficient Company Holdings. LP, these were issued before the company went public on the Nasdaq. Now, these investors decided to switch their investment from those preferred units into regular shares of Beneficient. This resulted in over 101 million new shares of Class A common stock being issued. After this, Beneficient had a little over 110 million shares of Class A common stock out there. The company is saying this was done in line with a specific exemption in the law, meaning they didn't have to register these new shares with the public first. This move, called the limited conversion, was approved by special committees of the company's board, composed of independent directors, and then by the full board. Participants in this conversion also signed a voting and lock-up agreement. This means they've agreed to vote their new shares according to the board's recommendations, and importantly, these shares are locked up until the 1st of October 2028. That is quite a long time, and get this, they've also agreed to forfeit any gains on these shares between now and when the lockup ends. So it is a pretty significant commitment from these investors. They're also giving up some special rights and perks that came with their original preferred units. On top of the news about the conversion, Beneficient also put out a press release on the 21st of October 2025 to announce this limited conversion. We've got that press release attached as an exhibit. Now, a little note here. The info in this part of the filing is being shared with everyone, but isn't technically being filed in the same way some other reports are. It is more of a notification. And of course, the filing lists out its exhibits. We have the press release itself, Exhibit 99.1, which talks about the conversion, and then Exhibit 104, which is an interactive data file for anyone wanting to dig even deeper into the numbers in a machine-readable format. Now, signing off on this report are the key people at Beneficient, acting on behalf of the company. In this case, Gregory W. Ezel, the Chief Financial Officer, dated the 21st of October 2025, so a few days after the conversion happened. Alright, let's step back and look at the bigger picture here. What does this all mean for Beneficient? We've seen a significant amount of preferred units converted into common stock. This can be a sign of confidence from those holding the preferred units, seeing more value in common shares, or perhaps a strategic move to clean up the capital structure. The lockup agreement and the forfeiture of potential gains are quite telling. It suggests a strong desire to stabilize the share price and signal a long-term commitment from these investors, preventing them from potentially selling a large block of shares right away and depressing the stock. However, issuing over 100 million new shares can dilute the ownership stake of existing shareholders if not managed carefully. The fact that these shares were issued under a Section 4(2) exemption, which allows for private placements without full registration, is standard for such conversions, but doesn't mean investors won't be watching the stock very closely. The company is essentially saying that these investors are sophisticated enough to understand the risks without the full regulatory protection of a registered offering. What is really interesting is the long lockup period and the forfeiture clause. This indicates a desire for stability and a focus on long-term value creation rather than short-term trading by the new common shareholders. It's a way to align incentives and reduce immediate selling pressure, which can be a big deal for a company that has recently gone public. The potential risk here is if the company's performance doesn't meet the expectations of these investors, or if the market turns against them, they might face challenges down the line. On the flip side, the company is cleaning up its cap table by consolidating different classes of securities. This can simplify financial reporting and make it easier for investors to understand the company's ownership structure. The fact that the conversion was approved by independent directors is a positive sign, showing that due diligence was likely performed. Overall, Beneficient seems to be making a strategic move to consolidate its ownership structure and secure a committed group of long-term shareholders. The success of this will depend on the company's ability to deliver on its promises and manage the expectations of these newly minted common stockholders. The long lock Up and forfeiture clauses are bold moves that could either pay off handsomely or create future headaches if the business falters. Alright, that is our breakdown of Beneficient's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.